Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 23rd, 2025, and we're diving into Trustmark's second quarter 2025 financial results. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Trustmark has reported some interesting numbers this quarter, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. Trustmark reported a net income of $55.8 million for the second quarter of 2025, with an adjusted earnings per share of 92 cents. How does this compare to expectations, John?
Trustmark exceeded expectations, with analysts forecasting an EPS of 86. The actual EPS of 92 reflects strong profitability. Total revenue increased by 2.1% to $198.6 million, driven by a rise in net interest income, which contributed to a net interest margin of 3.81%.
That's impressive. What factors contributed to this performance?
The growth in net interest income, which rose by $6.7 million or 4.3% from the previous quarter, was a key driver. This was supported by stable credit quality and disciplined expense management.
Loan and deposit growth. Moving on to the balance sheet, Trustmark saw growth in both loans and deposits. Can you elaborate on this, John?
Absolutely. Loans held for investment increased to $13.5 billion, reflecting a 1.7% growth quarter over quarter. Deposits also rose to $15.1 billion, with a slight decline in the cost of total deposits to 1.80%. This indicates effective management of their funding costs.
What does this mean for Trustmark's financial health?
The growth in loans and deposits, coupled with a stable cost of deposits, positions Trustmark well for future profitability. It shows their ability to attract and maintain customer relationships effectively.
Credit quality and risk management. Credit quality is always a concern for financial institutions. How did Trustmark fare in this area?
Trustmark maintained stable credit quality, with non-performing assets declining by 5.3% from the previous quarter. Net charge-offs were low, at 0.12% of average loans, and the allowance for credit losses was 1.25% of loans held for investment. This reflects prudent risk management practices.
That's reassuring. How does this impact their risk profile?
It suggests that Trustmark is effectively managing its credit risk, which is crucial for sustaining long-term growth and stability. Their proactive approach in maintaining a strong allowance for credit losses is commendable.
Operational efficiencies and future outlook. Let's talk about operational efficiencies. What are the highlights here?
Trustmark's non-interest expense increased slightly to $125.1 million, but they maintained an efficiency ratio of 61.24%. This indicates effective cost management. Additionally, they repurchased $26 million worth of stock in 2025, which is a positive sign for shareholders.
What did the CEO have to say about these results?
Duane A. Dewey, the CEO, emphasized their focus on expanding customer relationships and managing expenses diligently. He expressed confidence in their ability to create long-term value for shareholders.
EPS forecast and analyst expectations. John, let's discuss the EPS forecast. Analysts had predicted an EPS of 86. How did Trustmark perform against this forecast?
Trustmark outperformed the forecast with an actual EPS of 92 cents, beating expectations by 0.006 cents. This was based on estimates from 4 analysts, highlighting Trustmark's strong financial performance this quarter.
What does this mean for investor confidence?
Beating EPS forecasts generally boosts investor confidence, as it indicates the company's ability to exceed market expectations. This could positively impact Trustmark's stock performance in the near term.
Key takeaways. In summary, Trustmark has delivered a strong performance in the second quarter of 2025, with significant growth in net income and EPS. Their effective management of loans and deposits, coupled with stable credit quality, positions them well for future growth. Thank you for joining us, John.
Thank you for having me. Trustmark's results are indeed promising, and it will be interesting to see how they continue to build on this momentum.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Trustmark's performance in the comments below. Until next time.